Coming up on International Trade Focus, we shall take a look at Ghana's trade sector growth and challenges in the year 2024. Ghana's trade and economic sector experienced some growth in 2024, defying expectations and positioning itself as one of Africa's most dynamic economies. With an impressive GDP growth rate of 6.3% and a trade surplus of 3.9 billion cedis, the year was a significant turnaround from 2023. Now, government programs like Planting for Food and Jobs Phase 2 and the One District, One Factory initiative, among other initiatives, drove this progress, despite challenges like inflation and cedi depreciation. On today's episode, we will explore these developments and their implications for Ghana's economic future. My name is Anna Spio, and this is International Trade Focus. You're watching International Trade Focus. On this week's episode, we're taking a look at the year 2024 and some of the economic successes as well as challenges that Ghana faced. Our focal point segment comes up next. Over the past few years, Ghana has proven itself to be one of the most dynamic and resilient economies in Africa, consistently defying expectations and challenges. Despite global uncertainties, the year 2024 marked significant progress for the country, with the trade and economic sectors showing impressive signs of recovery and growth. In the face of global challenges, Ghana's economy rebounded strongly thanks to interventions like the IMF-supported post-COVID-19 program for economic growth. These measures helped stabilize the economy and restructure debt, setting the stage for recovery. On our focal point segment, we are diving into Ghana's economic performance in 2024, exploring key achievements in the oil and non-oil sectors, impressive trade growth, and challenges like inflation and cedi depreciation, all while highlighting the country's effort towards sustainable growth in 2025. In 2024, Ghana's economy was on a fast recovery track, powered by macroeconomic stability and debt restructuring measures. This recovery was largely attributed to strategic interventions under the IMF-supported post-COVID-19 program for economic growth. According to the Ministry of Finance, Ghana recorded strong real GDP growth for the first half of 2024, with a year-on-year growth average of 5.8%, a significant leap from 2.9% recorded in 2023. By the third quarter of 2024, government statistician Samuel Kobna Enim reported an even more impressive average real GDP growth rate of 6.3%, which was nearly triple the 2.6% recorded in the same period in 2023.
Growth rate in GDP in the third quarter of 2024 stood at 7.2%. This indicates that between the third quarter of 2023 and the third quarter of 2024, Ghana's economy grew by 7.2%. In the case of 2023, that is comparing the third quarter of 2022 and the third quarter of 2023, the economy grew by 2.2%. So over these two time periods, that is between the third quarter of 2022 and the third quarter of 2023, which the economy grew by 2.2%, and the third quarter of 2023 and the third quarter of 2024, when the economy grew by 7.2%, we've seen a 5.0 percentage point difference between the year-on-year growth rate between 2022 and 2023 relative to 2023 and 2024.
At the core of Ghana's impressive growth lies the contribution from the non-oil and oil sectors, both of which played pivotal roles in reducing import dependence and boosting exports. The non-oil sector, covering agriculture, industrial and services industries, posted an average growth rate of 6.2% for the first 3 quarters of 2024, compared to just 2.6% in 2023. Leading the charge was Ghana's industrial sector, which achieved an average growth of 10.4% for the first 3 quarters, driven by mining, construction, and oil and gas production. Meanwhile, the services sector expanded by 6.4%, buoyed by growth in information and communication, financial and insurance activities, accommodation and food services, and transport and storage. The agriculture sector also played a significant role, growing by 3.2% with key contributions from crops and livestock subsectors.
From a sectoral point of view, we see a leap difference from the industrial sector perspective. With a current growth rate of 10.4%, the industry sector recorded the highest growth rate, followed by the services sector with a growth rate of 6.4% and the agricultural sector 3.2%. In the third quarter of 2024, the industry sector recorded the highest growth rate of 10.4%, distantly followed by the services sector 6.4%, and again distantly following is the agricultural sector 3.2%.
On the other hand, while Ghana's oil sector may not have matched the non-oil sector's numbers, its contribution to exports remains undeniable. Oil production and revenue surged by 10.7% year-on-year in the first half of 2024, reversing an annual decline that had persisted for 5 years. According to the Public Interest and Accountability Committee, PIAC, oil revenues reached $840.7 million in the first 6 months of 2024, up 55.6% from $540 million in 2023. This growth was attributed to the Jubilee Southeast JSE project, which commenced production in late 2023. Ghana's export sector flourished in 2024, with data from the Bank of Ghana revealing significant growth. Exports for the third quarter alone totaled 74.8 billion cedis, contributing to a total trade surplus of 3.9 billion cedis. On the import side, values dropped 70.9 billion cedis, a sharp reduction from the 186 billion cedis recorded in 2023, effectively reversing the previous year's 2.3 billion cedis deficit. Gold bullion, crude petroleum, cocoa paste, manganese ore, and tuna dominated Ghana's export portfolio, accounting for 83.2% of total exports in the third quarter of 2024. On the import side, Ghana's top 2 products, mineral fuels and oils, totaled 12.9 billion cedis. Despite these achievements, challenges remain. Inflation rose to 23.8% by December 2024, the highest in years, falling short of the 15% year-end inflation targets. Additionally, the cedi depreciated against the dollar, reaching 24.3% by September 2024, compared to 21.3% in August. Looking ahead, Ghana's 2024 economic resurgence reflects a strong commitment to fiscal consolidation, debt restructuring, and inclusive growth. These efforts set the stage for continued economic development and prosperity in 2025 and beyond. On this year's episode, we're taking a look at the year 2024 and some of the economic successes that Ghana chalked, as well as some of the challenges that we experienced economically. Joining us in this conversation on our in-depth segment is Dr. Edu Owusu-Sarkodie. He's an economist and a researcher at the University of Ghana. Our in-depth segment comes up next. In the year 2024, Ghana's trade and economic sector experienced significant growth. We recorded trade surpluses. There were also some challenges as well. So on our in-depth segments this week, we're having a conversation with Dr. Edu Owusu-Sarkodie. He's an economist and a researcher at the University of Ghana. Thank you so much, Dr. Edu Sarkodie, for joining us on today's edition of International Face to Face.
Thank you for having me.
Right, so we are going to delve straight into the reason why we are here today at Ghana's economic performance. 2024. We know we chalked some successes. For instance, we recorded trade surplus in the year 2024. Inflation is another topic that we're going to delve deeper into. So basically, that's what we want to take a look at today. So I'm going to read some statistics from the Ghana Statistical Service that revealed that Ghana's exports and import sector saw a record trade surplus of 3.9 billion cedis, with exports amounting to 74.8 billion, while imports totaled 70.9 billion. It goes forward to say that it is in contrast to the 180.7 billion cedis total exports and 186 billion cedis total exports recorded in the third quarter of 2023, and this resulted in a trade deficit of 2.3 billion. So basically, in the year 2024, Ghana recorded trade surplus, and we saw an increase in exports. That was about 74.8 billion, whereas in the past, you know that we import more into the country. So my first question is that, how do we maintain the trade surpluses? We understand the benefits that it has for the economy, but how do we maintain it?
I want to pick the conversation from this angle. From 2017 coming, with the discovery of new oil wells, Ghana has been exporting more than we import, except the years of 2022 and 2023. So if you have enjoyed trade surpluses for more than 8 years, and so it's actually not a question of which one is greater than the other, because within the 8 years, more than 6 of the 8, we have exported more than we imported. So what's the issue? The issue here is about the ownership of the exports. And I'll give you an example. We export crude oil, about 5 billion to 6 billion. Gold is about 6 billion. And we export cocoa. It's only the cocoa that we have 100% ownership of it. Gold and crude oil, we command about 20, 25, 30% of the revenue. So you may export that much, but it's the issue of how much of it comes to you into your revenue generation. That is why when you look at the balance of payment, you see our trade surplus, but you go to the capital account, you see repatriation. So these foreign companies, not only the mining companies, most of the foreign companies we have in the country, they repatriate. So I think the conversation should not be limited to trade and imports and which one is greater. First, the ownership of the exports, and second, repatriation, because you can trade, and if the mining companies want to repatriate, that will also weaken your currency. So the solution is that first you must enforce the repatriation law. There's something called retention law. In South Africa, you cannot go and do business in South Africa and repatriate all your profits. Ghana, we have it, but we do not enforce that law. We have to enforce that law, and then also make sure that we incentivize many Ghanaian investors into the export production. But I agree with you that there's also the need, no matter where you pick the question from, there's the need to maintain the surpluses. And i.e., the surplus is always a gap between exports and imports. So how do you up the exports and how do you reduce the imports? Pick first with the imports. We know Ghana is an import-dependent economy, that almost everything that we consume is imported. So local production. Let's have our factories. The One District, One Factory has been started. I think that this government should continue on. They already have their policies. So let's have local production to replace or substitute for most of the items that we import. That one you can bring down the imports. Then for the exports, I've talked about gold. Gold is okay. Crude oil is okay. This year, Ghana is going to start producing lithium in commercial quantities. That's valued around $7 billion. So our exports, we don't seem to have much problem with the export, except with the ownership. The non-traditional exports, I'm sure, is one of the issues I wanted to talk about. That's where you find many Ghanaians doing them, the testers, the mango, pineapple, vegetables. So we have to encourage, you have to incentivize them to keep up with the production of non-traditional exports. So in that sense, we can maintain their surpluses, and we can also have much of our trade differences going into our revenue. So the key point is here is that how much of our trade goes into revenue? For me, that's the question.
That's a very interesting take because we are talking about these trade surpluses, and as you mentioned, in the layman's terms, we are exporting more, but when it comes to how much we own as a country, yes, it's very insignificant, right? If it's about 20% and all compared to the 60, it's very insignificant. So we've also established the importance of the non-traditional exports. So as far as you're concerned, that will give us a bit more ownership because most of these companies will be Ghanaian owned and all of that. So how do we boost our non-traditional export sector? That is the private sector, the manufacturing sector, the agricultural sector and all of that. How do we boost it? I ask this question all the time. And it's quite repetitive, but I guess it's an important conversation that we need to have over and over and over again. So in your opinion, how do we boost the non-traditional export sector?
Both producers and consumers are rational. So if you want people to go into the non-traditional export production, because they are rational, they must be incentivized. Something must be given to them so that they have the desire to go into those areas. So every rational entrepreneur wants to make profit. The profit is the gap between sales and cost. So what goes into the sales, what goes into the cost? First, the sales markets. Thank God for the African Continental Free Trade Area. We can leverage that. Ghana is the host of the Secretariat. We can leverage that and increase demand for them so that they can increase sales. Come back to the cost area. What goes into the cost? Interest rate, inflation, exchange rate, all of these feed into transport costs, storage facilities. So these are the things that increase cost. We must deal with them, and those that can boost sales, like open markets, having free trade area. We can leverage on that. So the investor in Ghana goes to borrow at, say, now the interest rate is around 30%. But the same entrepreneur in Japan can borrow at 2%, 5%. How can you compete? I'm producing mango, the Japanese is producing mango. But I want to expand my farm, I go to borrow, the interest rate is 30. My colleague in Japan goes to borrow, the interest rate is 5. So the things that feed into cost of production, I've mentioned them: interest rate, exchange rate, transport cost, storage facilities. These are the things that we must deal with as a country to incentivize the non-traditional export producers.
Yeah. So you touched briefly on the inflation rates and the impacts that it has on all of these conversations that we are having. Now, so Ghana's inflation rate, as you know, has been on the rise for 4 consecutive months. Now, despite Bank of Ghana's monetary policy rate cut of 27%. Again, these are conversations that we have over and over and over again. In your opinion, what are we doing wrong?
Inflation is a monster. The fight against inflation has been a very tedious one for Ghanaians. But so first of all, we have to look at the two sides of inflation. We have the cost push and demand pull. Now, demand pull is the one we learned in high school, more money chasing fewer goods. When Bank of Ghana prints money, as they printed in the year 2022, we saw the impact on inflation, right? So excess credits in the system will cause demand pull inflation, given production. The cost push inflation has been, for me, the major one. If you want me to give a percentage, I'll give like 60 to 70% of our inflation is coming from the cost side. And what factors lead to the cost is similar to the ones I gave to the non-traditional exports. So the exchange rate, transportation, storage facilities, all these are feeding into the cost of producing an item in Ghana. And so to the extent that these factors increase cost, I'm a rational human being. If my cost is high, I'll increase my price to keep my profit margin the same. So the cost of production has always been the case. So on the local level, even what we think is local production, the inputs, the raw materials are imported. So whatever we think is even the local production, the raw materials are imported. So first, the cost of production locally is a major issue. How many of our farmers don't experience the rotting, their goods rotting on the road? By the time they transport them from the villages to the cities, the goods are rotting, and so they have to increase the price. And there's also something we call the economic rent seeking by our market men and women. The farm gate price and then the market price, there's a huge gap between them. For instance, somebody goes to the farm to buy a bag of rice, say 200 cedis. You come to Accra, Malata Market, and it's 800. So the huge gap between farm gate price and the market price is another factor. Some people are taking advantage of the system and they are profiteering, and that must be dealt with. Another factor is imports. If you also disaggregate inflation into local inflation and imported inflation, you see that imported inflation is higher than local inflation. So local inflation, let's take for example, I'm importing from China. If inflation in China is high, I'm only succeeding in importing China's inflation into my country. That's point one. Point two, the exchange rate. If the exchange rate shoots from 10 to 16, and I'm an importer, in the past, even when it was 10, I would need 10 cedis to buy $1. Now in 16, I will need 16 cedis, 6 cedis more. I want to maintain my profit. What will I do? I'll increase the price. So that's why the fight against inflation has been a tedious one. So many factors from the cost side, from imported inflation, from the exchange rate effect. And we need to talk about this. There's something called pass-through effects from exchange rate to inflation. And today I was telling my students that there's a positive correlation between exchange rate and inflation. Very strong correlation. Anytime the cedi depreciates, our inflation picks up. So there's a positive correlation between the two. And that's why it's been so difficult. So I've talked about the monetary side, which is demand pull. I've talked about the cost side. And so the approach to fight it should be a multifaceted one, not only one angle. So this is the reason we've been unable to fight inflation. But I must say, Ghana has enjoyed single-digit inflation before. During President Mills' time, we enjoyed single-digit inflation around 9% for 32 months. Under President Akufo-Addo, we enjoyed single-digit inflation for almost 2 years. We had it from the year 2018 to 2019. We had a single-digit. In fact, one of our lowest inflation of 7% was in 2019. And then the external shocks, COVID and then Russia-Ukraine war. Not only that, we also have the disturbances in the Middle East when Iran, had a fight, the Palestine and Israel. They're all feeding into these uncertainties. And Ghana's election, we had an election last month. The uncertainties around some of these things are making it difficult to fight inflation. That's why we keep fighting it, but we are not winning the war. But hopefully things will get better.
So when it comes to external shocks, there are people that till this day do not understand how these external shocks have a direct impact on the global economy. But I believe that you'll be able to explain to us a bit more on that. So let's have a conversation on that. External shocks like Russian-Ukraine war, the COVID-19 pandemic, and the Palestine, war and all of that. How does it affect the global economy?
First, directly and indirectly, it depends on your exposure. How exposed your economy to their economies. No economy is an island. We live in a global village where we trade with one another. And more than 90% of Ghana's fertilizer are imported. If you talk to the bakers, those who bake bread, the wheat they use are imported from Ukraine and Russia. So when there's war, when the war breaks up and there's instability and it's causing some disturbances to the economy and inflation shoots up in Ukraine, you go to import wheat from them. Already the price in Ukraine is high. So you are going to bring the high price back to your economy. That's point one. Point two is the supply chain disruptions. For instance, I trade in Ukraine. I'm going to bring wheat to Ghana. If normally it would take me like 3 days to bring my goods to Ghana. Because of the disturbances, I cannot pass through, say, Russia. I have to go around it, and it takes me like 10 days instead of 3 days. So that long journey will increase my cost of production or cost of transporting my goods to Ghana, and then it will increase the price. So the external shocks will have impact on your economy depending on the extent to which you are exposed to them. So that's why some people will question Ghana and say, why is Ghana complaining about the impact and the Côte d'Ivoire is not? Because our extent of exposure is bigger than Côte d'Ivoire. And even with this example, Côte d'Ivoire doesn't have monetary policy independence. Whatever they do is dictated to them by France. Ghana has monetary policy independence. So we do everything by ourselves. So if there's a shock, we receive it. When there's a shock coming, France will cover Côte d'Ivoire. But here, because we are independent, nobody covers us. So that's also another reason. So to the extent that you trade more or you depend more on Ukraine, Russia, Israel, Iran, then that will have more impact on you. If you are not exposed that much, then it will have little impact on you. That's indirect or direct, no matter how you say it. The exchange rate effect is also important. How? Because of the external shocks, they may increase prices, and import bill will go up. When import bill goes up, the cedi depreciates. And when the cedi depreciates, we know the pass-through effect on inflation and other variables. So these are the various ways that, but most importantly is your level of exposure, your degree of exposure to their economies.
Yeah. So after these shocks, when it comes to how we are recovering, how would you assess it? Because the shocks were, like very heavy on the country that really affected our economy. In terms of bouncing back, how would you assess it?
In the IMF document, they have stated that the external shocks, they use a word, you are an English person, exacerbated.
Yes.
So exacerbated means worsen the situation. It did not say that we didn't have any challenge. So we had our own internal challenges, and then the shocks exposed us more, right? So how do you deal with it? We've been trying as a country to deal with the external shock, but first you must have well-grounded economy. Internally, you must resolve your issues, because transportation cost is not external, storage cost is not external, profiteering is not external. So we have our own internal challenges that we must deal with, and then we can resolve the external one. But thank God that the presence of IMF has helped us, because Bank of Ghana's reserves were depleting. In the year 2022, it was depleting so fast. It was around getting to $1 to $2 billion. Today we have $8.2 billion because of the presence of the IMF. So the presence of the IMF program is helping us recover from all these things. But the IMF program is just for stability. Yeah. After 3 years, it's supposed to end by April 2026. They will leave. They will give you stability and they leave. Whatever you use the stability for is up to you. So we have to have, our internal solutions to our problems, and so we are recovering, but the pace has been slow because of, again, the environment. I've mentioned to you the election environment. There were so many uncertainties, and thank God for Dr. Bawumia for conceding early. That reduced the tension in the system, because so many people were uncertain about the outcome, about how the politicians are going to react to the results. But he conceded, and so calm was restored to the Ghanaian market. So now those uncertainties are gone. We are left with the very internal challenges that we have been talking about all this while: transportation, storage, profiteering. If we can deal with them, then we are fine. So the simple answer to your question, we are recovering, but the pace is slow.
We're having a conversation with Dr. Edu Owusu-Sarkodie. He joined us on our conversation on Ghana's economic growth and challenges in the year 2024. There's more after this break. Don't go away. You talked about the International Monetary Fund policy, or you know that as a country, during the last couple of years, we saw how governments had to do a 180 after saying that they're not going back to the IMF. And a lot of people are of the opinion that, fine, it might stabilize the economy for a while, but it ends up, making things worse in the long run. You being an economist, would you agree with this, that going to the IMF to stabilize our macroeconomy in turn ends up, putting us back in the same soup that we're in previously?
I tend to understand those people who make that argument, because we have been to the IMF 17 times and we don't seem to see that transformation that we want to see. Secondly, I think that IMF, they have changed their modus operandi. In the past, they would dictate to you exactly what you must do. I'll give you an example. In the 80s, when we went to the IMF, they asked the government of Ghana to lay off workers. Now, that recommendation is no longer. What IMF do now is to recommend. They don't tell you specifically what you must do. So, for example, they will say, raise your revenue. How you do it is up to you. So upon facing criticisms from, Jeffrey Sachs, Stiglitz, these renowned economists, they have changed the way they do things. The IMF, you go to the doctor when you are sick. If you don't want to go to the doctor, then don't get sick. So we always go to the doctor, we fall sick, we go, they'll clean us, and they will come back, we mess up, we go, they clean us. Whether or not we should go to the IMF depends on us. First of all, IMF will only come and give you stability for 3 years and they will leave. IMF is not here with us perpetually. They leave. We've been there 17 times. Anytime they come, they go, they come, they go. What have we done about the stability they gave us, afterwards? What do we do? So we can't blame the IMF at all. If you don't want to go to them, then don't mess up. Because there are countries, we don't even remember the last time they went there. Go to Saudi Arabia, ask Qatar, ask even some of the African countries like Botswana, ask them the last time they went to the IMF. So these countries have disciplined themselves and they're not going there. You only fall sick when you go to the doctor. If you don't want to go to the doctor, don't fall sick. Make sure you put your house in order. And I'll also add this, the argument of whether or not to go in this very IMF program, I would say that was the only option left on the table because our economy was sinking. If you look at the figures were looking so bad. Our economy was sinking. First, the reserves were depleting. Second, inflation was rising to the extent that we ended the year 2022 with the highest inflation I've seen of 54%. So things were getting out of hand. So if you are sick and you are vomiting and you are doing this and you're doing that, the only option left is to go to the hospital. Yes, so our economy was sick, and the only option was to go to the IMF. If you don't want to go to the IMF, then don't fall sick. Put your house in order, and we are fine. So it comes back to the point I'm saying that IMF does not give you a long-lasting economic transformation solution. They don't. They are interested in stability. What is stability? Low and stable inflation, low and stable exchange rate, low and stable interest rate, increase your reserves, balance of payment surplus, trade surplus, the one you were mentioning. After that, they will leave. So if you want the situation where many Ghanaians, your people, when they complete the university, they will get a job, IMF will not tell you that. You have to decide for yourself as a country that you want to build factories so that when the young people finish school, they can get jobs. IMF will not tell you that. You have to decide. Another thing is that the natural resource that God has blessed us with, I haven't seen in any IMF document talking about it. They know that if we do more over there, we can get more finances, but they don't tell us. If they don't tell us, and you Ghanaians, don't you also have eyes? Yeah. So honestly, we cannot blame them at all. We have to put our house in order and be disciplined. We will not need to go to them. There are so many countries who have not gone to the IMF in the past 60 years, and they are fine.
So I believe that one of the challenges that government faced during that period is, generating revenue. So they sought to bring out policies like the electronic levy, e-levy, in order to generate revenue. And, the issues with Parliament, when to pass it and the delay and all of that. So as you mentioned, their backs were against the wall and we had to go. Now, let's come to 2025. The current government is saying that the electronic levy is something that he's going to take off. And we know the importance of generating revenue, internal revenue as a country in order to stabilize our economy. What do you think about this, the taking off of the e-levy?
We did some research. We picked data from 2006 to 2024. We realized that the public debt had increased from 5 billion to 700 billion.
From 5.
From 5 to 2006 was 5 to 700 billion end of 2024. That's 14,000%. 14,000%. Meanwhile, the revenue has increased by just 4,000%. Your debt is increasing by 14,000%.
Is that what they say? We all owe some money.
I'm sure you saw my pictures all over. I didn't say it anyway. It was TV's own thing. So our domestic revenue had increased within the period by just 4,000%, and debt has increased by 14,000%. What does it mean? It means that as a country, we have resorted to borrowing than mobilizing internal revenue. So I will always advocate for internal revenue. But for any finance minister or any government to raise revenue, you do not just tax anyhow. You introduce certain taxes and tax the areas that have high revenue generating potential. There are so many ways. I can just give you a list. The property rate has been found by some researchers that it should be 2% of GDP. Our GDP is 1 trillion. 2% is 20 billion. But if you check the budget, it's not even up to 10. The informal sector income tax is about 1% of GDP. That's about 10 billion. But we are not getting it. We're not even getting up to 500. But specifically, you asked a question about e-levy. My position on the e-levy is on the internet. I've written an article. In fact, I even won an award from that. I say that e-levy is a good idea, but poorly designed. That was my argument. To the extent that you can use the e-levy to get personal income tax in the informal sector is a good idea. But in its current form, it's poorly designed. Whether or not to abolish it, I think we should be careful in this abolish scenario. MPP made a similar mistake in 2017 when they abolished a number of 17 taxes. What happened? Revenue fell. Meanwhile, they wanted to keep their promises in the manifesto. NDC should try not to repeat that mistake. I mean, the government should not repeat that mistake. So already Ghanaians have gotten used to e-levy, payment of e-levy. It is not causing any problem. Momo transaction is going up. Why don't you want to touch it? The last time I checked the figures, last year it raked in 1.1 billion cedis. 1.1 billion cedis can finance 1/3 of the free SHS cost. Free SHS cost is 3 billion. So if you want 1 billion from e-levy, at least 1/3 of the cost is covered by e-levy. Yeah. Why would Ghanaians want to enjoy certain things free and don't want to pay taxes? So COVID-19 levy and all this. So they should be careful not to abolish the taxes and cause problems. For me, if you ask me, I think they should maintain it. E-levy, COVID-19 levy, whatever, they should maintain it and make sure that we get the best out of it. Because I listened to Honorable Atuforsen last time, and he was of the view that he wants to raise the tax to GDP ratio higher, he wants to simplify the tax system, but the proposals that he's making will give in long-term results. In the short term, we may not see the results. This cut expenditure, President Mahama has reduced the ministers to 60. We'll see the impact of this in the long term, maybe after 3 years, 5 years. But immediately, if they remove e-levy, remove COVID-19 and all that, we're going to see a significant loss. That's about $3 to $4 billion loss. So all these levies put together can finance free SHS. So why would we want to provide secondary education free to somebody and you don't want a person to pay tax? I am of the firm belief that if you want to remove revenue, then cut the expenditure. If Ghanaians are calling for you to finance free SHS, then keep the taxes. You cannot reduce the tax and keep the free SHS and other government, Now they want to add private schools. That's a promise by NDC. They also want to add first years. Yes. I mean, you cannot be doing all these things and be abolishing taxes at the same time. So they either cut here and cut, or they keep and keep. It's that simple. And we should be careful. We should not repeat the mistakes of MPP in 2017. So the bottom line is that no matter how you want to borrow, you will still come home to mobilize resources internally to service your debt. It's the reason the capital market door was shut to Ghana. From 2022 up to now, government of Ghana has not been able to borrow from the capital market. Why? Because they say that when we borrow, we can't pay. In simple terms, we will default. And we have defaulted. Look at the domestic debt exchange and external debt exchange. Everything shows that we defaulted because we could not mobilize resources domestically. So you can run to any place and borrow. You will still have to come home and mobilize resources domestically to service your debt. So we can't run away from paying taxes and paying levies and all that. So they should be careful with that. Abolish. If they want to, it can be abolished when in future we see that the revenue is picking up. Then you know that if you remove this, it will not cause so much trouble. Then you can abolish it. Another point is that when Ghanaians are used to something, it's difficult to take it away. Now we have gotten used to paying this e-levy, and who is complaining? Nobody is complaining now again. Now you're going to remove it. you get stuck along the way, and then you want to introduce another new one.
Yeah.
And people will resist it.
Yeah.
So they should be careful.
Yeah. Yeah. So I'm particularly interested in how you said that the e-levy is a good policy, but then the design was
The design is very poor.
So what are some of your recommendations?
I've recommended in my article, first of all, there are commercial activities, e-commerce. So tax it. People sell all sorts of things on the internet, do business online. Tax them. Yes, that one they should be taxed. And second one is that if you still want people to pay e-levy, then redesign it and put it on the telco's charges. If I send money to you and MTN charges say 1 cedi, add 50 pesos to it, so that you 1.5 cedis. The 50 pesos will go. So you are taxing the service. You are taxing the telcos for charging me. Yeah. You get the point. So you are taxing the charges by the telcos. That one is a good design. Or the almighty one, which I say use it to tax the incomes of those in the informal sector. I have put up a house. I employ masons, carpenters. They can charge as much as 10,000 cedis. The one who roofed my house charged 6,000 cedis. How many of our cleaners in University of Ghana earn 6,000? You take some people's pay slip, it's like 1,000, 2,000. And these 1,000, 2,000 individuals, they pay personal income tax. But the carpenter who collected 6,000 from me didn't pay personal income tax. So a policy must be made that we pay these artisans using Momo. Yeah. And when they receive, you rather pay the charge, not the one sending, the one receiving will have to pay the charges. So if I'm sending 100 cedis to you, and I know that you are the one to pay the charges, and I don't want you to pay, then I'll top up. Yeah. But it shouldn't be paid by the one paying. The e-levy should be paid by the one receiving the money. By the one receiving. Exactly. Yeah. So another thing is that if you go to let's say you go to market to buy used Momo, and the one receiving the Momo will have to pay tax. But there's something called returns, tax returns. So I pay you 100, this one 200, this one 50. You, the one receiving, you pay the tax. If you have been filing returns, all you do is that put all your documents together and go to GRA and collect your money back if you have been paying taxes. But you see, so many of our businesses around here do not pay taxes. So this is the recommendation that I've made, the telcos, the e-commerce, and the fact that the receiver must pay, not the payer who must pay. And the focus must be taxing the incomes of those in the informal sector. Go to Abosokai. Very rich. Go to Makola. Some of them are very rich. They have houses at, Airport Hills, East Legon Hills, and all that. They don't pay personal income tax. Meanwhile, the cleaner in the University of Ghana, whose salary is 1,000 cedis, pays personal income tax. And the same people, their wards will go to PESEC free. It doesn't make sense. So we should rather redesign the e-levy and focus on the informal sector. And we can get it. Uganda is doing it. In Uganda, all those carpenters and masons are paying taxes. They are making incentives. In Rwanda, you cannot enjoy any public service when you have not proven that you pay tax. Right. Like, for example, you're going to renew your driver's license. You go, they say, show your tin. They'll enter your Ghana card number in the system so that, hey, if you owe. You pay before we give you the license. You take your child to Achimota for free education. Show that you pay tax. You don't pay tax, you will not admit your child. So we should be serious as a country. Yeah.
We're having a conversation with Dr. Edu Owusu Sarkodie. He joined us on our conversation on Ghana's economic growth and challenges in the year 2024. There's more after this break. Don't go away. And it's a wrap for the next edition of International Trade Focus. Join us same time next week for some more on international trade-related activities here in Ghana and beyond. My name is Anna Spio. Thank you so much for your company. Bye-bye.